Ladies and gentlemen, good evening and welcome to Q4 and FY26 earnings conference call of Anlon Healthcare Limited, hosted by Concall Partners. As a reminder, all participant lines will remain in listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks and presentation. Please note that this conference call is being recorded. Before we begin, I would like to mention that certain statements made during this conference call may be forward-looking in nature. These statements are based on the current expectations, assumptions, and estimates of the management and are subject to various risks and uncertainties. Actual results may differ materially from those expressed or implied due to several factors. The company undertakes no obligation to publicly update or revise any forward-looking statements. We represent the investor relations for Anlon Healthcare Limited, and on behalf of Concall Partners, I extend a warm welcome to all investors, analysts, and participants joining for us for Q4 and FY26 earnings conference call. The company will be represented by Mr. Puneet Rasadia, who is the Chairman and MD of Anlon Healthcare Limited. Over to you, Puneet ji.
Yeah. Good evening, everyone, and warm welcome to Anlon Healthcare's Q4 and FY26 earnings conference call. Thank you all for joining us today. FY26 has been a milestone year for Anlon, in which we delivered strong financial growth while meaningfully strengthening our manufacturing platform, regulatory capabilities, and long-term growth foundation. Let me begin with our financial performance. On a consolidated basis, total income for FY26 grew 42.98% year-on-year to 172.22 CR from 120.46 crore in FY25. EBITDA increased 47.55% to 47.77 crore, while profit after tax grew 41.77% to 29.09 CR. This performance was driven by expanding demand across our pharmaceutical intermediate and API portfolio, improving operational efficiencies and disciplined execution across our key business verticals. For the fourth quarter, total income stood at 50.90 CR compared to 48.97 CR in Q4 FY25. Profit before tax for the quarter was broadly stable at 14.44 CR versus 15.49 CR. Reported PAT of 11.07 CR was lower than the 16.65 CR in the corresponding quarter, primarily on account of higher operating and development expense. As we scale the platform, we believe the full year trajectory is a more representative measure of the underlying momentum in this business. From a strategic standpoint, FY26 marks an important phase in Anlon's growth journey. We continue to strengthen our position as research-driven manufacturer of pharmaceutical intermediate and APIs with a presence across 15 countries with 21 DMF filing and growth regulated market focus. We remain among the few Indian manufacturers for loxaprophen sodium, ketoprofen, and dextromethorphan trometamol. Operationally, our manufacturing platform remains robust. Our facility is operating at a healthy capacity utilization of approx 62% at consolidated basis, supporting by strong R&D capabilities across our dedicated R&D centers and expanding molecule pipeline and increasing CDMO engagement. We are currently developing 3 molecules for 2 global innovators, which reinforce our long-term strategy to build scalable custom manufacturing platform. During the year, we made significant progress on our inorganic growth strategy. We completed the acquisition of Apico Organics Private Limited, which strengthened backward integration and adds substantial capacity, and we completed the acquisition of Exotic Life Science, now a subsidiary of Anlon Healthcare, further accelerating capacity expansion and regulatory readiness. With this initiative, our combined installed capacity has expanded to approximately 1400 to 1600 metric ton per annum, positioning us for the next phase of scale growth. Alongside our core pharmaceutical business, we have also diversified into the industrial and fine chemical segment, which is witnessing encouraging early traction and complements our existing capabilities, customer relationship, and growth strategy. The global pharmaceutical and API industry continues to benefit from increasing outsourcing, supply chain diversification, and rising demand for compliant manufacturing partners, with India a key beneficiary of global China Plus One strategy and supportive domestic policy for API manufacturing. Looking ahead, our priorities remain focused on launching of 7 new APIs in FY27 across additional therapeutic categories, filing 3 to 5 additional DMF in FY27 to deepen regulated market penetration and long-term revenue visibility. Scale our industrial in fine chemical verticals to unlock new revenue streams, integrating Epico and Bizotic to improving cost competitiveness through backward integration, scaling CDMO opportunity and global customer engagement, supported by our expanded manufacturing platform, regulatory capabilities, and diversified product portfolio and strategic acquisition. We remain confident of delivering approximately 30% of revenue CAGR over the next 3 years, while working towards maintaining EBITDA margin in the range of 25 to 30%. With this, I would like now to open the floor for the question and answer.
Thank you. Participants who would like to ask questions may press the Q&A.
Sorry to interrupt you, but I think your voice is getting echo.
Yeah, I'll check this.
Can we start? Are you there?
Yes. Yeah. Am I audible now?
Yeah, it's better now.
Yeah. Participants who would like to ask questions may raise their hands, and they also have the option of posting the questions on the Q&A box. We have the first question from Miss Disha. Miss Disha, you may unmute and introduce.
Hello. Am I audible, sir?
Yeah, Disha.
Yes, thank you so much, sir, for this opportunity. So my first question was on our overall revenue growth. So I think last time we spoke, we were targeting around 360, 370 crores this year. And in the PPT, we've given 30% CAGR. So what should we look at as the overall number, sir, for FY27 revenue?
Yeah, we are still remain the bullish on the revenue numbers what we have given to you. That should be right now the whatever the visibility we are having, it is between 380 to 400 CR for FY27.
Okay, so we are expecting higher than that also, okay, sir.
Yeah.
So, sir, this current capacity that we have, this 1400, 1600 metric ton, what is the peak revenue potential of this current consolidated capacity, sir?
See, right now in the current situation, with the increase of the price, obviously we have increased the price of our product also. In this scenario, I think we may go up to the 450 to 500 CR in the peak capacity.
Okay.
Yeah.
Okay. And so this 380
now, the capacity we are utilizing, that is consolidation basis, it is somewhere between 62 to 65%.
So this peak will reach in FY27, right?
We hope so that we can utilize on the peak level, but right now practically it is not possible to use more than 85%. So I am just giving you the figure, assuming that we'll use the 80% of the existing install capacity.
Okay, fair enough, sir. And the new expansion, sir, that we were targeting, what is the capex that we're looking at, and when do we expect this facility to come online, and what will be the revenue potential from that facility?
see that new CapEx in the existing Anlon healthcare premises, the work has already started. The basic plan layout is almost under the approval, and we are expecting by mid of this month. So we are planning to start the construction activity by end of this month or maybe early next month. And the CapEx is expected somewhere around 130 CR.
130 CR. So in this facility, commissioning will expect by Q4?
Mostly by Q1 of FY28.
Okay. And so what will be the peak revenue from this facility?
That will continue. If we'll consider the standalone Anlon with the expansion, then we can go up to the 400 to 450 CR and the standalone at the peak level.
Okay. And so for this the new capacity that will come, what sort of utilization will be target for FY28?
Yeah, that we are considering at least we'll use 50 to 60% in FY28.
So around 6-7.
And all those things, we have to do some trial run, some of the validation of the product and all those activities. So we are considering 6 months of working with the new expanded facility.
So around 700 to 800 CR revenue run rate we can see for FY28.
Yeah, FY28 we are expecting between 700 to 800 CR.
Okay, sir. And my next question was on your margin, sir. So given that we have just acquired, so there will be some pressure because of this acquisition as well. So how should we look at the EBITDA margins for FY27 and for FY28?
See, I think these are the EBITDA margin. We are trying to maintain the same EBITDA margin. But see, the prices of raw material and global supply chain is totally disturbed. So I think it is not possible for me to predict what is going to happen after this quarter and what will be the situation. If things will be normal as per the pre-war situation, then we'll able to maintain the same EBITDA margin. Otherwise, it may impact on the EBITDA margin, but definitely we'll have the better pricing also in terms of the selling price.
So even at the lower, in the worst case scenario, also it shouldn't go below 25%. That's the range that you
will not reduce our product price and will not sell the product below certain level. That will impact on the EBITDA margin.
Okay, and so just last question from my side. From what will be, if you can just give me the standalone margins for Apico and Bizotic EBITDA level margins?
Disha, can you pardon? Actually, some disturbance.
Yeah, so Bizotic and Apico, what sort of EBITDA margins do we see for these two companies? If you could just give me that would be really helpful.
See, in Apico, I think the EBITDA margin was little bit lower, being a chemical or intermediate manufacturing or products of that category. It will not be the same as the pharma. But in Bizotic, we'll try to keep the almost similar margin as Anlon. So overall, our EBITDA margin, what we are expecting, that would be between 24-25%.
So Apico, we are at 24-25% EBITDA.
Apico, little bit low, 2-3%. So you can say like 20-23%. But consolidated overall margin would be between 24-25% and will not go below that margin.
Okay. That is very helpful, sir. Thank you. I'll get back in the queue.
Yeah.
Thank you. Participants who would like to ask questions may raise their hands and may also post their questions on the Q&A box. The next question is from Mr. Paras Chheda. Parasji, you can unmute and introduce yourself.
Thank you so much, Partbhai and Punitji, for this opportunity. And good evening to you. And congratulations, sir, for a strong set of results. Sir, just what I've understood so far is for FY27-28, the revenue guidance that you have indicated between 380-400 crores and about 600 to 700 crores for FY27-28 respectively, with about ballpark console margins of 24-25% EBITDA margin. Is that correct?
Yeah, Parasji, you can go ahead.
Okay. Yeah. So now just I was looking at this cash flow again. So trying to understand that there was a steep jump in inventories and other financial assets. Just trying to understand what are these? I mean, there's a steep jump.
See, in terms of inventories, once we'll try to achieve the more top line or sales, then we need to keep the inventories. So in part of the Anlon, now we have just acquired the Epico in the, I guess, first week of the January. So that set of inventory, whatever will be there, and in terms of the bijouterie, so that impacted on our balance sheet, but that will be already sold in the first quarter of this FY27, and that will be definitely you will get the clarity on inventory part and cash flow part in first quarter result. So, but more or less everything is under control, and normally we are keeping the 3 months inventory, and basically that inventory is showing higher because the price of the raw material in most of the categories more than the double for in terms of raw material, solvents and catalysts.
Right. So what are these other financial assets, that has gone up substantially? Are these advances or something?
Yeah, that advance payment we already made against the capex what we are trying to do in the Anlon, because whatever the equipment what we are installing, that is that we have to give the order before 6 to 8 months. Some of the new equipment we already installed in the existing facility. QC we have already expanded according to our new expansion. So that capex we have done for the equipment, and some of the payments we have already made against the new capex.
Understood, sir. So for against 380, 400 potential revenue target for this year, what is the current order book as of now?
See, right now we have the clear visibility in terms of the order book is somewhere around 280 to 300 CR for the whole year in consolidation basis. But we are sure that within the year, additional 80 to 90 CR business on the basis of the product that we can clear it. So we are expecting on basis of that 380 to 400 CR. But clear with order book right now we are having between 280 to 300 CR.
Right, sir. And on the CDMO opportunity, sir, for these 3 molecules, what stage are these projects currently in? I mean, the expected timeline for commercial revenues?
See, one product out of 3 that is already supplied for the in a validation stage of around 100 of the in multiple of 100 cases in month of the March. Commercial supplies should be expected by third quarter of FY27, and other 2 molecules validation is expected by the second quarter of FY27. So I think that commercialization we can expect by last quarter of FY27 or from the first quarter of FY28.
Right. So somewhere around by end of this financial year, probably CDMO commercialization.
Mostly validation is should be completed, and at least first one product should be commercialized.
Understood, sir. For this pending ketoprofen DMF filing in the US and dexketoprofen filing in Europe, again, what timeline should we expect, sir, in terms of incremental revenue?
Ketoprofen DMF in Europe is already processed. I think now query we are expecting from EDQM, and mostly within next 2 or 3 months it should be completed. Ketoprofen DMF in US, right now we are not directly filing in US. But as we have discussed or mentioned before that one of our customer is going to file on behalf of us. So as of now the situation is little bit slower. So maybe what we are expecting in second quarter of FY27, it may go on the third quarter or maybe last quarter.
Right. So and just last 2 questions mine. One is, our borrowing as of now is fairly limited, so that is good. But so there are 2 things, sir. I mean, when do you expect us to turn positive, cash flow from operations? I guess we discussed this last time.
End of FY27, it will be positive.
So on an annual basis, FY27 will be positive, or you were talking about?
On annual basis, FY27 will have the positive cash flow.
Will have the positive cash flow. Okay, sir. And just last query. So to achieve the 600-700 crore kind of potential revenue target in FY28, basis, if we are turning positive cash flow, do we need any equity issuance raise, etc., over the next 2 years or so?
Right now, we are not having any plan for the dilution of any equity, but yes, for the expansion of the facility, we are planning to get some in terms of term loan from the bank for the at least 65 to 70 CR of the term loan and remaining from my incremental funds. So that we'll doing with our own fund.
So to achieve, I mean, the 600-700 crore revenue, we don't need, I mean, will be managed within the internal accruals and debt. We don't need equity, outside equity.
Right now, there is no planning, but I think once the capacity will be completed and will come with the commercial production, at that time, we'll see that whatever the situation, and if required, then our first preference is go with the financial institution instead of going further for the dilution, or maybe we can go for the right issue or something instead of private placement.
Understood. And as we speak, sir, what are the receivable days? I mean, average?
See, right now, the receivable days is somewhere between after invoice making, you have to consider 130 to 140 days. Even in domestic, some of the customer is paying at 150 days also.
Right.
But
And
the average you have to consider 130 to 140.
And this is what we'll assume stable for FY27, or is there a,
See, that is not going to be changed because see, now the normally market trend is that the general payment terms is 90 days, but you can expect your payment between 120 130 days.
Understood, sir. Fair enough. But at least cash
Pharma, it is very normal. I think even if you'll work with any trader also, then trader will also give you the 90 days payment somewhere between 105 to 110 days. But if you need to do work directly with the corporate, then you have to consider payment terms 120, 130 days.
Understood, sir. Fair enough. So basically, by the end of the financial year, will be cash flow positive from
Yeah. So whatever the previous due and receivable was there, that mostly it will be received, and we are hoping to get it positive before end of this financial year.
Okay. Thank you so much, sir. I think for that. Thank you.
Thank you. Participants who would like to ask the questions may raise their hands in the reactions tab and also may post their questions in the Q&A box. Next, we have Mr. Ashish Parikh. Ashish ji, you may unmute and introduce yourself. Ashish ji?
मेरी आवाज आ रही है? Am I audible, sir?
Yeah, Ashish bhai, you are audible.
हाँ सर, थोड़ा सा मुझे आप पहले तो सर जो फोर्थ क्वार्टर में थोड़ा डिस्ट्रप्शंस हुए, तो थोड़ा सा could you explain a little bit more हमें कैसे इसका इम्पैक्ट हुआ है, और क्या जो क्वार्टर 4 के डिस्ट्रप्शंस हैं वो थोड़ा क्वार्टर 1 जो अभी चल रहा है इसका थोड़ा रेवेन्यू हमारा बढ़ा देगा? So first on this, sir, this disruption impact on our.
Sorry to interrupt. Can you pardon your question because your voice was broken?
Okay, sir. Am I audible now, sir?
Yeah, you are audible now.
Sir, I just want to understand the impact of this crisis on our business.
Okay.
जैसे हमारा EBITDA मार्जिन भी काफी कम आ गया सर, और रेवेन्यू भी हमारा लोअर रेंज पे रहा, तो अभी सर इसका इम्पैक्ट कितना है, और क्या Q4 का इम्पैक्ट की वजह से Q1 थोड़ा बढ़ जाएगा हमारा?
Yeah, Ashish bhai, I got your question. See, actually what happened in Q4, in terms of revenue, we have done almost at par with the year-on-year basis of FY25. But in terms of EBITDA, now what happened? Now we are going forward to become the professional companies, system-driven. Our operating cost is little bit higher. We have acquired 2 facilities, so some of the operational costs involved for that also. And due to that war situation, the prices of raw material is increased, and we were holding the purchase order with the previous prices that we have not able to increase with the customer. So it directly impact on the EBITDA and EBITDA margin. But now the situation is that now everybody is understood, it's considered as a force majeure, and we have convinced the customer to increase the price in appropriate terms or according with the prices of raw material what increase in the right now market. So increase our product price also. So I think in Q1 that EBITDA margin will be more or less similar with the previous whole year's EBITDA margin with the in numbers of also EBITDA. Because see, we are mainly in B2B business, so our price obviously it is impacted on all the customer, and they are it is taking time to convince forward means to their customer. So now most of the pharma company and API manufacturer are aware that the situation is going to be changing very soon, and this is the new normal with the prices in consideration of the prices of the dollar, crude prices, which directly impact on the prices of the solvent. So we are getting the better prices also for our products, and more or less our EBITDA margin is as good as like the previous pre-war situation.
Okay, sir. So, sir, so we are firmly on track to achieve our target of 380 to 400 crores for FY27.
Yeah. See, in terms of sales, there is no problem. See, business is also not an issue, because what I believe is pharma comes under the demand is actually increased compared to the pre-war situation. But the now thing is that how long it will take and what impact it will come every day on the prices, because nowadays prices of most of the common solvents and raw materials with the validity of only 1 day. If you are not confirmed, then tomorrow will be the next new prices. So our customers accordingly. But if something uncertain will happen, which is beyond everyone's control, then things will be different. Otherwise, now everything is in our control, and whatever the EBITDA margin, what we are expecting with the new top line of this FY27 between 380 to 400 CR, that will remain the same between 30 to 35% of the EBITDA margin.
Okay, sir. Noted, sir. Noted. Thirdly, sir, हम लोग ने रिमेंबर फार्मा का भी एक्विजिशन किया है.
Yes.
तो उस पे सर हमारा प्रेजेंटेशन वगैरह में कहीं कुछ मेंशन नहीं था, तो थोड़ा सर उसके बारे में बताएं. Would you like
because it was acquired in this FY27, that's why it was not mentioned in this presentation, I think.
Okay, sir. So, sir, how do you see it ramping up, and how do we consolidate it with Anlon, और इसका revenue impact कैसे रहेगा in coming future days? मेरा कहने का मतलब ये था सर कि रिमेंबर फार्मा भी है acquired. Hello, am I audible?
I think your voice is not clear.
सर मैं दो क्वेश्चंस हैं जो दोनों में.
Your voice is not coming.
I am posting my questions on chat box, sir.
Yeah, no issues. I'll revert on that.
Thank you so much, and best wishes.
Thank you. Participants who would like to ask questions may raise their hands from the reactions tab and can also post their questions in the Q&A box. Next question is from Mr. Bhavesh Patel. Bhavesh ji, you can unmute and introduce yourself.
Hi, very good afternoon. Thanks for the opportunity and congratulations on great set of numbers YOY. Though QOQ we noted they are muted from profit front. Puneet bhai, I have following questions for you. Number one, probably you have answered partially, but if you want to, that you can expand. And that is around management has maintained a guidance of 25 to 30% EBITDA margins. This is slightly lower than what we had heard earlier in terms of 30-35%. Also, Q4 saw a sharp YOY decline, and that is due to input cost volatility as well as the other expenses. So, are these newer margin in terms of the pressure that we have structural or transient, and what specific cost optimization benefits have you realized from backward integration with Epico as well as by Bizotic, and how do you mitigate the newer raw material headwinds?
Yeah, Bhavesh bhai, I previously mentioned that EBITDA margin was reduced just due to the operational cost and the raw material prices in the new situation. But now I think we are on the verge to able to get the higher prices from our customer, and we are able to maintain the same EBITDA what we are confirms between somewhere around 30%.
Perfect.
And regarding the backward integration or the cost efficiency and the profit efficiency after this acquisition of Epico and Bizotic, basically, firstly, we have secured our backward integration supply chain with the acquisition of Bizotic, where we are doing our backward manufacturing since 3-4 years. In the Epico, now we have not started our backward manufacturing of any intermediate as of now, because there are certain business there is already there, and in which we have the pool of the capacity we are utilizing. But now there is a planning that in some of the reactors we'll try to start our backward integrated intermediate, which will definitely give us the benefit in from Q2 in terms of profitability as well as the stable supply chain.
Great. Thank you, Puneet bhai. Second question is, we have reported a significant increase in revenue.
Clearly, I think.
Okay. Actually, I'm using a laptop, but I'll come again. The question is about high interest rate environment with a major greenfield expansion that we have planned. What is your plan for balancing the increased working capital that we'll have, as well as the capex? And capex, you mentioned about internal accrual and the term facility, so that is fine. But will we also require increased working capital as well?
Yeah, true, Bharat. We need the even working capital if we'll plan to achieve the more than 600-700 CR top line. But I think that maybe we can plan in the last quarter of FY27 once we completed the commencement of the new expanded facility. But in terms of working capital, as of now, we are having the option to get the cash credit from the bank as well, or maybe we can go for some further option to raise the capital via right issue or other way. But as of now, we are not planning for any dilution in terms with the preferential and or any other option.
Appreciate that, because I think I agree. I mean, rather than diluting that way, I think the rights is a much better option. But yes, so appreciate that. The third question is around, we have 21 DMF filings and companies shifting our focus towards regulated markets. Can you share the expected timeline for commercializing this DMF linked product, and what impact we see with this shift in terms of asset turnover ratio with existing domestic product basket that we have?
Yeah, see, right now, out of 21, I think we have already started 5 to 6 product commercial supply to regulatory market, and that impact. And some of the new product, I think that will be commercialized by third quarter of FY27. So mostly out of 21, 5 to 7 products will be regularly commercialized within this FY27 for the export. And the other impact, what you are asking on asset turnover ratio compared to existing domestic product basket. So as earlier we also mentioned that we are trying to do at least somewhere around 60% of the export contribution in this FY27.
Wonderful. Thank you. Next question is, you mentioned about Q1 FY27. How does the remaining financial year looking like in terms of increased input cost and uncertain geopolitical environment? And you have answered it, so I'll probably skip this question. Next question was around the guidance for free cash flow at the consolidated level, and your response on that, because we have that capex also coming up. So that's what I want to understand from you, Puneet bhai.
See, for cash flow, as I mentioned, that we can assure that by FY27 will end up with the positive cash flow with the consolidation and all those activity. Considering the capex, what we are newly doing in Rajkot plant, for that As I mentioned that 50% or 60% we are planning to get it the finance from the bank and remaining from our internal funds. So, is there any question or confusion at your end? Then
No, I think now it's clear. Now it's clear. Thank you. And in fact, the last question I'll ask differently in terms of I saw in your press release as well as the opening note that we are expanding to specialty chemical as well as fine chemical. So what is required in terms of manufacturing as well as capital, and what is the expected EBITDA and PAT margin for this product, and by when we expect material impact in or contribution to revenue and PAT from this segment?
For specifically specialty chemical, right?
Yes.
See that we are having the enough product line with the enough capacity in the Epico, and mostly we'll, if required, then we'll do the expansion separate in Epico. That is already under discussion with one or two customers who can dedicatedly buy out our total capacity for the some of the specialty chemical. But in terms of EBITDA margin, that will be slightly lower than the pharma, but we'll try to keep the consolidated, as I mentioned, that between 24 to 25%.
Okay, that helps. And so basically we are saying another 3 to 6 months is by when it'll start showing higher contribution, right?
Yes.
Okay. No, this is very exciting times, challenging as well, but we have a lot of confidence. So thank you for everything that you're doing, Puneet Bhai, as well as the entire Anlon employee base and the team. Thanks for the opportunity once again, and all the very best to all of us.
Thank you, Boswell.
Thank you. Participants who would like to ask questions may raise their hands in the reactions tab and may also post their questions in the Q&A box. Next question is from the line of Mr. Gaurav Shukla. Gaurav ji, you may unmute and introduce yourself.
I'm audible, sir.
Yeah, Gaurav.
Sir, thank you, sir, for giving me opportunity to ask. Sir, first question I want to ask that, as you said, sir, that FY27 is 400 crore and FY28 is 800, approx 800. What is the key driver for Anlon Healthcare to reach that destination?
Gaurav, can you pardon? I think I have not got your question clearly. Can you repeat it?
Yes, sir. Sir, as you said that we will reach in FY27 at 400 approx, and FY28 revenue is 800 approx. So, sir,
Okay.
how we will reach there? What is the key driver to reach there, sir? How you have planned, sir?
See, we have worked and invested a lot of our time, energy, money, everything on the preparation of the DMF, approval of the product, establishing the product quality, identified the customer as well. Now the time to get the fruits out of that investment. So whatever the clarity in terms of our key products, NSAID category, some of the new products, what we are already working with some of the innovators, and on basis of their projection for our product as a first vendor or alternate vendor, whatever the quantity we have been informed by the customer, on basis of that, we are going further for the organic expansion as well as the new product commercialization. On basis of that, whatever the figure what we are proposing, that is in current year with the new consolidated with expanded facility after acquisition of 2 facilities, we can easily reach up to 380 to 400 CR. And next year, after organic expansion commencement of the new facility, the 2 new molecules what we have planned for that, out of that, we can go up easily at the 700 CR of the top line.
Okay, sir. As is, sir, PPT में, sir, you have shown in EPICO guidance is 30%, and this is about 100% guidance, 400 crore. Then I asked this, how, sir, you will reach?
Yeah, because in this year we'll have the full consolidation with the capacity utilization of EPICO and Bizotic, because in last year, this FY26, we can get only 2.5 months for the EPICO and hardly 15 days for the Bizotic.
Okay, sir. Sir, one question. एक चीज पूछना था सर कि split and bonus, sir, you have done.
Yeah.
How it helps our company? I am maybe pardon for that. I can't understand that.
Yeah, actually, we want to increase the liquidity in the market and we want to increase the number of shareholders. Because see what we have identified, after 4 to 5 months, the number of shareholder is almost saturated and it will not increase the like what we are expecting. So liquidity rotation must be stopped. So just to increase the liquidity and increase the number of shareholders. So after split and bonus, it is almost 25,000, which was around 11,000 for last 4 months. So our target is to increase the liquidity so that mainly we are trying to get the at least 100,000 to 150,000 of the shareholder. So counter will be also live and there is a liquidity for all the stakeholders.
Okay, sir. Thank you, sir, and all the best for future, sir.
Yeah.
Thank you. Participants who would wish to ask questions may may raise their hands in the reaction tab and may also post their questions in the Q&A box. Also, would request participants to stick to 2 questions as we are running short on time. So next question is from the line of Mr. Rudraksh Raheja. Rudraksh ji, you can unmute and introduce yourself.
Yeah, thank you for the opportunity, sir. Congratulations on a great set of numbers. Sir, my question, am I audible, sir?
Yeah, Rudraksh.
So my question is on, again, sir, working capital, which you have already discussed a lot. On receivable side, you said the market norm is around 120 to 150 days. We are still at 200 plus days on receivable side. So any thoughts on that?
No, there is nothing like thought, Rudraksh. Actually, see, as previously we also mentioned, there was some incident happened due to that some of our receivable was delayed. It is not defaulted, as I have mentioned in our previous meeting also to you. And by end of this FY27 with the positive cash flow and receivable days will remain at least 180 days, which is I think mostly API manufacturer is having. If you consider or compare with the pharma company who is getting the advance payment for the formulation, and that will compare with the API manufacturer, then it will be little bit injustice to API manufacturer. So below 180 days of the receivable, it is practically, I feel that it is impossible because there are none of the customer who is going to pay you advance payment for any of your products in API category.
Got it, sir. And sir, on the inventory side, you said there will be a lot of liquidation in the first quarter itself because of new inventories from Bizotic and EPICO coming in. So, any guidance for Q2 FY27 with respect to inventory number? Like what kind of?
Basically, we are keeping the minimum 3-month inventory for our rotation, and as we are going for the development of the new product, for the commercial validation batches, commercial their process validation, sampling and all those things. So any point of time, it will go work in the development part when inventory will be blocked unless and until your DMF will be approved and commercial supply is started. So that will impact on your inventory part. But I think we'll reduce our inventory, whatever right now here, in Q2, somewhere around 20 to 25% will be liquidated without any doubt. because our 5 to 6 new product is already under commercial validation, and we have to keep that inventory at least for 6 months till our accelerated stability is performed.
Got it. Got it. And this 20 to 25 reduction, this is till the end of
Rudrakshi, sorry to interrupt. You can join back in the queue.
So this is a follow-up question, nothing new.
Okay.
Yeah, Rudraksh, you
Yeah,
can.
so this reduction 20 to 25%, this is expected at the end of next year.
Q2 FY27, as you
Okay.
mentioned, yeah, Q2.
Okay, sir. Got it. Got it. And sir, again, last question on the working capital itself. When should we see this other financial assets coming into the net block? So you said now we have paid advance for our ongoing capex. So
Yeah,
when should we see that?
we have already started the working for the new expansion. So whatever advance payment we have paid for the capex, that installation and everything is already in line, as we are planning to start the commercial production by Q1 FY28. So before that, all these capex will be on the books.
Got it, sir. Got it.
Thank you. Participants who would like to ask questions may raise their hands from the reactions tab and may also post their questions in the Q&A box. Next, we have Mr. Nitin Sharma. Mr. Nitin, you can unmute and introduce.
Hello, I'm audible?
Yeah, Nitin.
Yeah. Punit bhai, two questions. First of all, are there any more acquisitions are in pipeline?
Yes.
And what would be you are actually looking for in terms of capability, or is it a client acquisition sort of a plan? If you elaborate on it, it will be very helpful.
See, right now, basically what we are doing, you can see the overall chronology. We have acquired one intermediate and fine chemical manufacturing entity. We have acquired one intermediate API manufacturing entity. We have acquired one formulation plant in this FY27. Now, what we are looking is just as we are going for the further organic expansion, so we are under discussion with some of the entities who are having the upper end or add-on advantage in terms of marketing and distribution of finished doses. And maybe we'll plan to go with some of the regulatory market with our FDF as well as some of the new that peptide manufacturing what we are planning. So that entities we are looking to acquire right now.
Okay, and any specific number that you in mind that this much is kind of your budgeting for these acquisitions?
See, that depends because I think we have enough way to raise the fund in terms of from the company or as well as from the pocket of promoters. So that is not that exact budget for that, but depends that whether that acquisition in line with our company's vision, what we are planning after 5 years or 10 years, or where we want to bring the company after 5 years.
Understood. And just one bookkeeping question. What sort of or what kind of tax rate one should assume on a steady state basis, at least for FY27 and FY28?
Nitinji, can you pardon? Because there are some...
Yeah, so for bookkeeping reasons, what sort of a tax rate one should assume for FY27 and FY28 on a steady state basis?
Tax?
Yeah, tax rate. I mean, basically for modeling purpose, what tax rate one should assume for FY27?
I think that is, I also need to check that, means for FY27 and 28, both.
No worries. I'll connect.
Yeah, you can send me in
Okay.
private. You can get the details from Parth.
Perfect. Thank you.
Thank you. Participants who would wish to ask questions may raise their hands from the reaction tab and may also post their question in the Q&A box. Next question is from the line of Mr. Mohammed Nameer. Sir, you may unmute and introduce yourself.
Yeah. Am I audible now?
Yeah.
Yeah. Thank you for the opportunity. Can you please tell what are your competitive advantages and what are the barriers of entry in this business?
Competitive advantages
And barrier of entry, yeah.
Sorry.
What is your competitive advantage?
In our business, right? Against our competitor.
Correct. Yes.
Yeah. See, basically, we are having the diverse portfolio, specifically in the painkiller, non-steroidal anti-inflammatory drugs category, in which there are hardly 2 or 3 players for the ketoprofen and dexketoprofen in India, and mostly globally 5 to 6 players, 2 in China, 1 in Korea. But our advantage with us is we have the always process upper end in terms of specific chemistry, like methylation and Friedel-Crafts, where we have already cracked the chemistry and we have taken out the cost of the manufacturing at certain level where we don't have any competition. And whatever the customer we are having right now with us, that is both the innovators for most of our products, apart from innovators, the top 5 or top 10 generic player with us. So stability with our products is already there. The consistency with the business is already there, and the new development of our new products, in which we are far ahead than our competitor in terms of our landing cost. So that's what we are believing, that the consistency and competitiveness against our competitor we are having. And what is your second question, Mr. Mohammed?
My other question was, you earlier mentioned about 30 to 35% EBITDA margins, but I just checked Q&A tab. There you are saying 25% EBITDA margin is sustainable. Am I missing something?
Yeah, see, EBITDA margin 25% is sustainable. Right now, whatever the EBITDA margin we are facing or having, that is not stable in last Q4. But generally, as I earlier also mentioned, what we are believing that whenever we are working in domestic customer, at that time our EBITDA margin was little bit lower. When we are working in the regulatory or export market, there we are having the better EBITDA margin. So when you get the average EBITDA margin, that will be somewhere between 25, somewhere around 25 to 30%. So on the conservative side, I am just confirming you or mentioning that our EBITDA margin with the consolidation, it will remain around 25%.
Well, that helps. Thank you so much.
Thank you. Participants who would like to ask questions may raise their hand from the reaction tab and may also post their question in the Q&A box. Next question is from the line of Mr. Ram Prakash Agarwal. So you may unmute and introduce yourself.
Mr. Puneet sir, good evening.
Good evening, sir.
Hello, sir, am I audible?
Yeah, you are audible.
Hello? Hello, sir, am I audible?
Yeah, Ram Prakash ji, you are audible. You can ask your question.
Hello? Hello, sir, am I audible?
Yeah, Ram Prakash ji, you are audible. You can ask your question.
Puneet sir, am I audible?
Hello.
Hello?
Yeah, Parth, are you getting my voice? Maybe he is not getting.
Yeah, I'm
Hello?
able to hear you. Sir, we can hear you.
Hello?
You can go ahead with your question.
Hello, Puneet sir, am I audible?
Yeah, Ram Prakash ji.
Hello? Hello, sir?
Hello. Ram Prakash ji, you are audible. You can ask your question.
Hello, sir.
Puneet ji, we can move with another participant.
Okay.
Yeah.
Hello? Hello?
Hello, Ram Prakash ji, you are audible. You can ask
Hello.
your question.
we'll move with another participant. Next we have is Mr. Achyut Prabhat. So you may unmute and introduce yourself.
Hello, sir. In November 2025 Concall, I think you said that you lost one of the distributor and some 20-30 crores is pending from them. Are you able to recover that amount, sir?
Yeah, we have already recovered almost 11 CR from there, and I think within next 1 quarter we'll able to get the mostly total whatever the receivable from them. So right now it is somewhere around 17 CR outstanding.
Sir, also in this year, we have made 170 crore revenue and trade receivables for almost 100 crores. What is the reason for that much high amount? Almost 60% of the sales are in receivables only.
Yeah, so you can check the receivable days is almost around 130 to 140 days. When you are considering the manufacturing process and dispatch time or logistic time, so it is the generally 180 days receivable cycle is there. But in our case, due to the previous receivable, which is old, more than 180 days, it is showing you the higher. Otherwise, you have to consider that 50% 180 days, considering 180 days of the receivable, the 50% portion will be in the receivable. Because last quarter sale you will add in that receivable, and the payment of 90 days you will able to recover in 120, 130 days. So almost 30 means 4 to 5 months your sales is already in receivable.
Okay. And what about cash flows, sir? Cash flows also reduced very. I mean, from -23 we went to almost -47. So in which year we can expect?
47 is Ramprakash, it is after consolidation. But I think, as I have mentioned that by end of FY27 cash flow, I am very much sure that it will be positive. Because all those remedies to make it positive, it is already done and going well. So we are 100% sure by end of this FY27 it will be positive.
Okay, sir. Sir, also I joined late, and what is the guidance for FY27, sir?
FY27, see right now whatever the visibility we are having with our existing customers order and the confirmation, we are mostly hoping to close it between 380 to 400 CR.
Okay, sir. Thank you so much.
Thank you. Participant who would like to ask the questions may raise their hands in the reaction tab and may also post their questions from the Q&A box. Next, we have a follow-up question from Ms. Disha. Ms. Disha, if you can unmute and introduce yourself.
Hello.
Yeah, Disha.
Hello.
Yeah, Disha.
Thank you so much for this opportunity again. So, sir, at a 380 CR sort of top line and with 25% EBITDA, even if I increase the depreciation and interest, can we do a PAT of around 60 CR? Is that something that we're looking at?
At the top line of 380 CR with the
380 CR with with 25% EBITDA margin as well. If we take, so are we looking at a 60 CR sort of PAT, sir, for this year?
We are right now actually on the conservative side. We are expecting the 45 CR of the PAT.
Okay, so but then if I take 25% EBITDA and even if I increase the depreciation and interest run rate because of the consolidation, still our PAT would be much higher than what, so 45. So
because
on a realistic basis,
we'll get the depreciation part on higher side after acquisition of the both this thing, because we have to go for the some of the new capex as well.
Okay, so on a conservative basis, it can be 45, but on a realistic basis, can we at least cross 50, 55 CR?
Yeah, it should be.
Okay. That is it, sir, from my side. Thank you.
Puneetji, we can take a few questions from the Q&A box. I can read out that.
I'm already replying to them.
Okay. We have the next question from Purva Shah. Purva ji, you may unmute and introduce yourself.
Hello, can you hear me?
Yeah, Purva ji.
હા પુનીત સર, મારે ક્વેશ્ચન્સ મલ્ટિપલ્સ છે. પહેલા હું તમને ક્વેશ્ચન મારે એ પૂછવો હતો કે તમે સ્ટેન્ડ અલોન પર જે નવું કેપેક્સ અનાઉન્સ કરેલું છે 130 crores નું, હવે એના માટે આપણી પાસે ઓન ધ બુક્સ આપણી પાસે ફિલહાલ તો કોઈ કેશ બચ્યું નથી, મતલબ છે જેટલું, પણ એની ઉપર આપણે ડેટ કે એવું કંઈક લેવું પડશે. તો એના માટે આપણે ડેટ લેવાનું વિચારીએ છીએ કે પછી એક્વિટી ઇન્ફ્યુઝન થશે?
See, we don't want to go for any equity dilution. Right now, we'll go with the bank loan, term loan for the around 65 to 70%, 65 to 70 CR, which is almost 50-60% of what we have planned for the capex. And whatever the remaining funds required for the capex, that we believe that from the profit and the other that working capital, what is the fund that we are expecting within this next 4 to 6 months, out of that we'll complete the new facility. Once after commencement of this facility, if requirement of the working capital, then we'll go with the way of the right or something, or maybe other in terms of credit, cash credit from the banks.
પણ સર એની અંદર આપણે જે વાત કરીએ છીએ કે આપણે 400 કરોડનું ટોપ લાઈન કરીશું, તો એના માટે બી જે આપણને વર્કિંગ કેપિટલ લાગશે એ બી આપણે ફંડ કરવાનું છે, એક નવું આપણે એક્વિઝિશન કરવાનું વિચારીએ છીએ એ બી ફંડ કરવાનું છે. તો એ 2-3 વસ્તુ અલગ અલગ પછી અગર આપણે કરીએ તો ઇવેન્ચ્યુઅલી આપણે એક્વિઝિશન સુધી તો પહોંચવું પડશે.
See, whatever the acquisition we are planning, for that
Sorry?
I am trying to.
Hello.
Yes, sir, I can hear you.
Yeah, for whatever the new acquisition in plan, that is not, I think, now immediate or within next 3 months or 6 months. So,
okay.
Whenever it is required, I think at that time, in term after means think whatever the possibility for the fundraising require means for acquisition in terms of valuation and all those things, we can take a call. But right now, I think dilution is not the option to raise the fund. We have some other option. Maybe we, as a promoter, we can infuse unsecured loan.
Okay, understood, sir. My next question was on the front wherein the credit rating reports have published a remark that the issuer is not cooperating. Could you throw some light on this here?
See, there are 2 credit report is published. One is from the CARE with the credit issuer is not cooperating. So this case is means very historical, and it is already mentioned in our DRSP that from 2018 or 19 it was going like that. CARE was doing the literally blackmailing to get the money and doing all those activity, and finally we have not given them a single penny for withdrawing that rating. That's why they were published. But apart from that, you can check that Brickwork has also withdrawn the credit rating in the same month with the double B minus.
Correct.
And we have already applied for the fresh rating to Brickwork again, and mostly I think after this result, within next 45 days, we'll get the fresh rating, and we have been assured that it will be somewhere triple B minus minimum at least.
That's great to hear, sir. That's great to hear, and we are looking forward to the report. One last question from my end, sir. We were in talks that we would eventually acquire the entire minority stake of Bizotic and Apico as well through share swap. What is the progress there?
Minority share, see, we have acquired totally the remaining share apart from the Anlon, that is with the promoter and their relatives only.
Correct. When will we complete that entire process?
I think it is, the discussion is already going on, mostly maybe within our next AGM, we'll take this point with the shareholder and we'll try to convert or by the share swapping, we'll make the 100% subsidiary of Anlon.
Okay, lovely. One last question, if I can squeeze in, sir. You mentioned that we would be cash flow positive, cash flow operating positive this year, FY27. Could you give some more insights on how would we actually do that technically from financials or anything from the business operations, sir?
See, basically that cash flow negative is mostly impacted by our previous or the delayed payment from some of our distributor and customer. After all this activity from last quarter, we have strict on our payment terms and we have made the policy not more than 120 days. If customer is not paying, we have stopped the supply to customer until we'll recover our funds. So after that, this payment recovery is now getting little bit smooth, and I think within this 1 year, most of the customer will also understood that if will not make the payment, then supply will not be started again. So we believe that even we'll able to recover the previous delayed payment also, as well as new payment against the fresh supply will also come somewhere between 92 to 120 days. So then,
but sir, sorry, continue, please.
So by this way, we are expecting our cash flow will be the positive by end of this FY27.
Okay. But sir, are you pretty confident that this would not affect your revenue figures because now we are not extending the credit
I think,
that
it will see basically what happened. This whole EBIT for making the payment delayed is by the Indian traders and distributors. So they will give you the whatever credit you want. Even you won't believe one of our customer who is already listed pharma company, as they are knowing that we are falling under the MSME category, so they have to make the payment before 45 days any which ways. Still they are not making the payment before 120 days. They are the very well-known corporate in the Indian pharma. So we have so what happened? We have last time stopped the supply to them because we are the part of their drug master file for one of our KSL. So they cannot change the supplier immediately if I will not supply to them, just on the basis of the payment terms and prices.
Okay.
So they also realize. So this is the way, and now they'll start to make the payment at least around 60-65 days.
Okay. That is understood from the institutional customers, sir. But from a dealer point of view, are you pretty confident on your demand would not get affected or something like that?
After our new policy, business is not impacted, but maybe instead of 120, 130 days, at least right now we are getting the payment somewhere around 100 or 105 days. So it will be further reduced and we'll get it up to 90 days as per the terms.
That would be great, sir. And all the best. And we are.
Because now what happened, I'll give you one more scenario.
Sure.
Now in this current situation, even raw material prices, even whoever the supplier or importer, considering the dollar price fluctuation, all those things, we generally are able to get the 90 days credit from our supplier. But now they are also offering not more than 45-60 days.
Okay.
Because
so you are seeing an industry-wide contraction in the credit days.
Yeah, because their working capital requirement is also increased due to the prices increase more than 100%.
Correct. Okay. Okay. Understood, sir. Thank you. Thank you for your time.
Okay.
Thank you. As there are no more questions, I would request Mr. Puneetji to give his closing remarks.
Parth, I think there are still so many questions in the chat box.
We can but since we have already exceeded our bandwidth, they can post the questions at info@confideleap.com.
Yeah, maybe all participants, you can ask the you can send the questions via Parth, or you can directly send it to me. I'll revert on each and every question.
Yeah. Mr. Puneetji, you can go ahead by giving your closing remarks.
Yeah, thank you everyone for joining in the earning call of Q4 FY26 and this FY26 financial result of the Anlon Healthcare Limited. And we would like to have your support as before, and we want you to be in the journey of the Anlon with us for the which there are so many things coming on the way, and we'll try to achieve whatever we are committing. Thank you everyone once again.
Thank you. This ends the earnings call for Anlon Healthcare Limited for Q4 and FY26. You may now disconnect.
Goodbye.